Hello, traders out there in. Whoa, I gotta bring this up. I'm standing at a desk. Anyway, let's get going here. I gotta get this thing right. Here in Tampa, Florida, D7 here with Grok Trade, and I want to talk to you about the stock market here. As expected, markets did go higher. We're higher, guys, starting off the weekly chart, looking at the S&P 500. Nice bullish move to the upside. Zoom in here so you guys can see this. Nice bullish move, closing above a major trend line. Guys, that's really bullish. We have bullish divergences on most of the RSIs that we have here. Everything's looking like we're trying to put in a bottom here and like we're wanting to rally higher. We did poke our head up over a trend line. You can see this right here. We're up over the top of this, but the question is, will we sustain that? If you look here at the diamonds, we're higher. We still have trend lines that we're going to deal with. NASDAQ, we're smacked our head right at a resistance. We had an up, a down, and an up. Will we get a down? We're watching that. We do have bullish divergences. Will we blast through? If we blast through, look for a sizable run to the upside on tech stocks. Russell's 2000. We stopped right at a major trend line, so we're right at it. You can see we're right at it. We didn't break through it for the week. Now we're right at it. So not great. The question is, will we drop here or will we blast through? Next Monday will tell the tell. If we have a really bullish Monday, that would bode well for the markets, and we should continue higher. If we do not look for this to really start to sink yet again, the short-term bottom is not in place yet. If that happens, and the financials here. The Russells was at resistance line. The financials, I'm going to go to the bar where it's paused right here at an area of resistance. I mean, it's bad news. It's showing promise on the weekly charts, but just bad news. Gold, monster drop, huge bearish week. Silver, big drop, not good. But we're under 25. Are you kidding me? Under 25 on the VIX. The markets are bleeding out. All the financials, 41-year high on inflation. We still got the Ukrainian-Russian war going on. We just broke the 6-month consecutive streak of pending home sales dropping. And last month shocked everybody, and we actually had pending home sales tick higher. And negative GDP, expecting the same coming into this next, sending us into a defined recession. All sorts of stuff you could add to that list. List in the comments below anything you'd like to add to the reason why you're bullish or bearish in the market as far as economics are concerned. But what I'm seeing here is when you bleed out in the markets, you should have a sizable run to the upside in the VIX, the fear indicator. We're not seeing that right now. So what that's telling me is we have a lot more downside because the bottom will not get put in until we're at the high 40s, 50s area or higher. And then the bottoms will start getting put in. We're not going to see that for some time. This is the new norm. This downtrend that we're in is going to be the new norm for several years. That's where we're at. And Bitcoin is starting to bounce here. We'll see what happens with that. Now, that's weekly charts. I'm not going to look at the monthlies because we're just getting started there. I mean, I said that spider monthly. Let me take a quick look at it. We're bouncing off this support line. Remember I said we have a really good chance of bouncing off of that? So far, it's 1 week in and we're bouncing off of it. Let's see if it will sustain. We're only 7 days into the month at this time, or 8 days in the month on this during this video. I'm trying to go fast here if you guys can't tell. But I want to show you the daily charts. Here's the daily charts on the S&P 500. Up as expected. We have major trend lines here that should act as resistance. We do have we do have an inverted head and shoulders. Shoulder, head, shoulder. We broke it. So by definition, that's an inverted head and shoulder trend reversal pattern. This should trend higher. However, let me share with you what I'm also seeing. I'm also seeing here a bear flag. A bear flag. That's the bear flag. If I look here and go to a line chart, you can see it. Bear flag. Bear flag. It could be that. It's anybody's guess. Look at social media. Andrew posted on social media what my thoughts were here is inverted head and shoulders or a bear flag. I would like your opinion down at the bottom and what you think it's going to be. Very important that, did you know, useless fact for you, that Who Wants to Be a Millionaire with Regis? If you polled the audience, you had a 91% chance of being correct. Fact. So anyway, put your opinions down at the bottom. Let us all see what your opinions are of the markets. This is a bear flag on the S&P 500. Is it an inverted head and shoulders? And are we going to go higher? Give us reasons why you think that, technically or fundamentally, or economically. Whatever you want to do, feel free to do that. But we had a nice run to the upside. We're going to have significant resistance here. We have a good chance of dropping once we hit that, even if we get high enough to hit that. That's what we see. However, like I said, if Monday is a really bullish day, especially if Monday is a bullish day so much that we can get above these trend lines, that will bode really well. And you could see continued upside, maybe to these levels before you start dropping. That could happen. Oh, by the way, I can move this out of the way. I don't know why it just floats around here wherever I put it. But it's a free chat room. If you guys want to be, it's 6 weeks completely free. Jump in and trade away with all the other traders that are in the chat room. Feel free to do that. But anyway, if I go here to the NASDAQ daily chart, we did break a major trend line. So this looks really, really good, guys. Really, really good. We had the falling 50-day moving average acting as resistance. I'm really curious what's going to happen. We're pretty extended to the upside at the moment of this. Russell's 2000. We're up, up, up. We're just at this swing high. You see that? We're at a major area of resistance there. Let's see what happens. Financials looks just like the Russell's 2000, but the problem is it's relatively weaker because we haven't got to this high up here. It didn't get to the high. So it went up, up, up. So it's already starting to drop again. This looks like a nasty bear flag to me, guys. Gold on the daily, as you can see, we just bottomed out, come crashing down. I thought we had a chance bouncing right here off of this, that we could get a rally. We did not see that. We saw something far different. Silver, same thing, down, down, down. A low base. Look for more downside opportunity there. VIX on the daily is down, down, down. Broke a major trend line to the downside. Guys, that is so bullish. Support, 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 and down. How's something going down bullish? Because this is a bearish inverse. So it only reads the bearish. So when you're bearish, it goes higher. When you're not bearish, it goes lower. It's not bearish. We're under 25. Time this video, just craziness. Anyway, hope my video brought some light to you guys and some help to you. I do appreciate, as you guys know, when you guys leave your comments, I give you my little heart. I put a heart on each one of those, and I comment on the ones that I think that a comment is due or necessary, or if you said something extremely kind, I like sharing those sharing comments back. So anyway, the time of this video will probably be Saturday morning. I'm doing this on a Friday night while I'm still here at the office in Tampa, but I'll probably have it posted Saturday morning when more people are in front of the computer and you guys all see it at the same time. Because believe it or not, when you leave comments, that helps me because I ask you guys, like if you made it to the end, say made it, that one comment shows engagement and the algorithm says, oh, people must like what you're doing. And if they like what you're doing, they show it to more people. So I like the idea of more people seeing this. I mean, I've been trading in the live markets almost 30 years using technical analysis, a long time. I've been doing this a long, long time. CEO of a hedge fund, fund manager. I own a trading education company. So we do teach this stuff. Not often, only out of 30 days, we only teach 3 days. So we only give back 10% of our time to teach. And we do that once a month. And so anyway, that's it. Don't know what else to share here other than the fact that I appreciate you. I sincerely appreciate each and every one of you guys who take the time to watch these videos. So we don't market, we don't do any of that marketing stuff. We just put out these videos and allow people to watch them on their own, share them if they think it's worthy of being shared. So anyway, take care, guys, and I hope that my lips and the audio are moving together this time. I used this computer, this setup last video, and it was all jacked up by the end. So I'm hoping it's not all jacked up. Instead of a 20-minute video, I gave you a 10-minute. I hope my 10-minute video gave you to some level of value as you were hoping for from my 20 minutes. Let me know if this was a good speed for you and a good amount of time, because sometimes I think, who wants to sit on a video for 20 minutes? So I condensed it, threw a lot at you. I hope that you take notes on that and hope you pay attention to what we're seeing in the markets to see what may happen. And do we know what's going to happen next? No, the markets do their own thing. What we have to do is play the odds. We are an odds based business, and that's what we do and how we play this game. Take care. Safe trading. We'll catch you guys later. We'll see you. Bye.